Hello, I'm Alex Davies, founder of Wealth Club. Today I'm with Enrico D'Angelo, Investment Director at Parkwalk. Hello, Enrico.
Hello, Alex.
First off, just tell me about Parkwalk and give me an introduction to yourself.
Okay, so Parkwalk was set up in 2009 by 4 partners, and basically we set up with a strategy to invest in university spin-out companies. Since then, we've gone from strength to strength. We've now made over 200 investments into 100 companies. We've now raised over £220 million of cash from investors, and we've been able to deploy that cash into a current portfolio of 85 companies. So Parkwalk's got a sort of diverse background of investment directors. My particular background is I was trained as an electronic engineer at university here in London. I then qualified as a chartered accountant and then went into the city. After that, I actually did an entrepreneurial venture where I think I learned a lot about startup companies, particularly the sort of key elements of raising sufficient quantities of investment and how to run those businesses in a good, successful way.
You invest in university spin-outs, you mentioned it then. What exactly is a university spin-out?
The university spin-out is a new company that's created based on the commercialisation of research from UK universities. So what you have in this country is that we as taxpayers fund university research to the tune of £4.9 billion per year. Once you add on, for instance, say things like the Wellcome Trust and Rolls-Royce funding laboratories, that rises to approximately nearly £7 billion a year. And part of the deal with the government is universities have to demonstrate impact, and one of those key factors is commercialising technology. So in effect what you've got now is in this country you've got technology transfer offices. They go in and talk to academics, they're big departments, they're set up to take a person's research and then effectively commercialise it, either by licensing the technology to an existing company or as creating a brand new company, which is a university spin-out company.
And can you give me a flavour of some of the recent investments you've made, say, over the last 12 months?
I think, our investment range is from brand new companies. So we actually run some early stage funds for the University of Oxford, Cambridge and Bristol. And our main opportunities fund can invest alongside those at the very earliest stage, but it also invests across the maturity spread. So we actually can invest in university spin-outs that have been going for even up to 5 or 6 years. And those are much more mature companies. It's slightly de-risked from the investment perspective, but it's still a risky EIS investment. I think people should be aware of that. So as an example, we've recently invested in a company called Oxbotica, which is an autonomous vehicle software company. So in effect, everyone's heard of Google driverless cars and Waymo in the States. What Oxbotica are doing is basically providing a software platform that can be incorporated into any driverless vehicle. So it's not just cars, it can go into vehicles that could be operating on, for instance, airports or enclosed spaces. And it's a platform technology. It takes the vast amounts of data that is coming off of a driverless autonomous vehicle, and it's able to interpret that and actually make sure the vehicle does actually go from A to B without sort of running people over or doing anything of those sort of bad things.
And do you have any other examples? Yeah,
so the range of technologies is quite immense. So for instance, this calendar year, the Opportunities Fund's invested £45 million into 24 companies, 8 of which are new. So one of the newer ones was a company called Paragraph, which came from Cambridge. So Paragraph have a new and novel way of basically manufacturing graphene. So everyone's heard of graphene, it's been around for a while. Again, came out of the University of Manchester originally, they won the Nobel Prize for that, but nobody's able to sort of manufacture graphene in sufficient quantities and in sufficient size to be able to effectively make a TV screen out of graphene. What this Cambridge company, which was headed up by the head of materials at Cambridge University, is created as a new manufacturing method, and they are being able to demonstrate already that they can produce a sort of flat piece of graphene, in the sort of A4, A5 type sizes. And once it's able to demonstrate that, then I think it will really take off. So it's a significant technology. It spun out, it raised £3.5 million, of which Parkwalk invested 1.75. But that company next year will require further sources of funding to effectively expand the current research base as well as a manufacturing arm.
Are you finding a lot of competition for these deals?
Not really, because Parkwalk is at the centre of this ecosystem. So as I mentioned, we run these funds for Oxford, Cambridge and Bristol. So our focus is very much on the golden triangle of Oxford, Cambridge and London, in fact. So of that sort of £4.9 billion of research monies, probably 50% of it goes to that golden triangle. So we're much more focused onto that area where the bulk actually of the university spin-outs are created. Now that doesn't mean there isn't activity throughout the country, and we've invested across many universities. In fact, one of our greatest successes came out of Leeds University. But I think what's happening is there's more an institutional focus on those areas. So in Oxford, they created 3 or 4 years ago a company called Oxford Sciences Innovation, which actually raised £600 million to invest just in Oxford. Cambridge has Cambridge Innovation Capital. And what Parkwalk does is it's at the centre of this ecosystem. We have the relationships with the universities, we have the relationships with our other investors, and we have the relationships with our existing portfolio companies. So I think there's a lot of interest in this space, but it would appear at the moment it tends to be more at the institutional type scale where companies are raising further sources of funding.
And you mentioned a success from Leeds University. Can you talk to us more about these successes?
Well, we've had a number of successes from Leeds. We've had exits from Cambridge. So in terms of our exits, Parkwalk has now had 19 exits, of which 11 have been down, 8 have been up. But those 8 have generated nearly £25 million of cash return to investors, and in some instances those exits have actually given investors their entire original subscription back and more. So there's a lot of gains to be made in this space. I think that's one of the characteristics. But as you said, those 8 companies returning that sort of level of cash by far outweigh the numbers that failed. I think that's quite key that people need to understand. Not all of these companies will succeed. So we give investors a portfolio of 5 individual companies, again ranging from one very early stage one to one later stage one, with a combination in the middle. Not all of those 5 companies will succeed, but you will find is that at least one of them will actually generate a sufficient return to actually return that original subscription back. So basically from 2010 we've made positive realised and unrealised returns with an IRR of over 40%. So quite significant performance.
And there are particular companies you want to talk about that you've exited at great multiples?
Well, unfortunately, some of them the terms are confidential. Some of the past historic ones. So we had one called VocalIQ, which was a Cambridge voice technology company, and that company was basically run by from a company called Professor Steve Young. And basically it had only existed for 18 months, and it was basically voice technology was actually acquired by Apple for significant amounts of money. And the rationale for that acquisition was quite interesting, because at that particular point in time Apple were competing with Google and Amazon with their voice technologies, and it would appear that at that point in time Google and Amazon were far ahead of Apple. So Apple basically looked around the world, found the best research and technology in this space and acquired it. And that is a characteristic of university spin-out technologies. Some of them can go along and actually develop into great significant companies, one I'll talk to you about in a moment, but some of them are quite niche technologies, but they know and they're driving those companies actually to be acquired by a global player. One company that we haven't exited as yet, it was YASA. And YASA produces the world's most efficient electric motor. It actually looks, rather than a sort of big can like this with a rod in through the end, it actually looks like the inside of a car wheel. In fact, actually that's where they put it. It's the most efficient electric motor in the world, and it's actually now forming part of 2 supercar manufacturers' platforms for the foreseeable future. They've just opened a £15 million facility in Oxford, opened by Greg Smith, the business secretary. So that is a big established company, definitely with valuations into the hundreds of millions, and that's a university spin-out. So that sort of gives you some example of the flavour of what we're investing in. We had an exit from a company called First Light Fusion. So that was very interesting. That was very risky right at the beginning. So basically this is clean energy. So they are developing a technology to produce clean energy. And certainly that could be a very, very valuable investment. But to acquire an incoming investor who wanted to acquire more of the company than was on offer, and actually then offered to effectively take out as a secondary transaction some of the original early stage investors who were actually 100% EIS investors. So that was a great return for those investors. They were in that company, they were exited, and the company now has moved on, and it's a much bigger scale than as an EIS investment.
So why should people invest in university spinouts? What's so attractive about them?
I think one of the key factors is the technology. The technology is fantastic. I mean, the stuff that we've invested in, I've mentioned graphene, autonomous vehicles. We're investing in companies that have platform technologies that can analyse a protein sample and work out actually what potentially is wrong with a person, and actually then also predict what drugs may work best on a person. We've got companies that can analyse CT scans and can work out the chances of dementia occurring or predictive strokes, things like that. So there's all sorts of technologies that are going on. The technology is very exciting. It's still risky, but I think the key factor is, as I mentioned before, the multiple returns that can happen in this space are significant, and I think that's the difference. We're not talking 2 or 3 or 4 times returns. So Parkwalk has had exits in the range of 8 up to 85 times return.
Very impressive. You talk about risks. How risky is it really?
Well, I think all EIS investment is risky. I think some key factors of how Parkwalk invests and how the university spin-out space does tend to mitigate that somewhat. So as I mentioned, we give everyone a portfolio of 5 companies. So again, that's sort of spreading it across different technologies and also different stages of company development, seed through to later stage companies. But the technology transfer offices do a fantastic job of effectively filtering the technologies that are spun out and created, so that they're making sure that the ones that do actually come out and attract investment, they've effectively sort of curated to the point where all the patents are filed, the IP is sort of tightened up. They've probably arranged to get the right level of investors in. You get management in right at the beginning, so it's not just the professor. The academics tend to not have that much involvement in the company, so very much more they're created with professional management teams. So the technology tends to work first time out, because that's how it works. So then you're sort of left to actually make an evaluation of, is the commercialisation going to work? We have 85 companies in our portfolio, so actually we've got a great amount of experience of being able to ascertain, having seen this happen before, so that in a new spin out we can ascertain whether those commercialisation plans actually stack up or not.
And how involved are you on a day-to-day basis with your portfolio company?
We tend to, we are on the boards of the majority of our companies. Some of the very early stage ones we can have representation, and the AIM listed ones obviously we don't have representation. But certainly in every investment we have the information right, so we do know actually what's going on, not necessarily on a day-to-day basis, but certainly on a monthly basis. Either we attend board meetings or the company sends us the right level of papers and financials. So we're very much engaged with those companies, and I think that's quite key, because certainly when one of our portfolio companies comes to raise further rounds of funding, we know that company, we know what the management's achieved or not achieved, whether they've hit those commercial milestones. So there's very much an element of looking at that investment with a great depth of knowledge. So these aren't necessarily all new. When you look at the brand new ones, they either come from the University Technology Transfer Office, and so therefore a lot of work's been done and available as due diligence, or it comes from one of our co-investors, and that's quite key, because the transactions coming from someone you've invested with on a previous occasion means that you know how they operate and how the investment's going to come together.
And finally, I want to invest in an EIS this year. Why should I choose you?
Well, I think firstly, our experience in this emerging asset class of university spin-out companies. We've got a portfolio of 85 companies. We've got a deal flow that is the envy of other EIS funds. I think we're able to deploy capital very quickly, certainly within a 12-month period, and our performance to date has been significant. We've returned 25 million in cash back to investors. We've had 19 exits, of which 8 have been positive and 11 have not been positive. But the 8 positive ones have generated an IRR in effect overall of over 40%. So there's significant attractions to investing with Parkwalk. People get a portfolio of 5 companies, and that's spread across 5 different technology and different maturities of companies. And it's just the cachet of investing in high technologies coming out of British universities, and one of those companies will generate significant returns that people will talk about over coffee and dinner.
Enrico D'Angelo, thank you very much.
Thanks, Alex.